Welcome to the MasterMINED Club, your ultimate gateway into the world of Bitcoin mining. Whether you're just starting out or looking to scale your operations, our vibrant community of like-minded enthusiasts is here to support you every step of the way. Join us for weekly sessions led by industry pros, where you'll exchange ideas, brainstorm strategies, and stay motivated on your mining journey. From heat management to site optimization, our monthly deep dives cover the technical know-how you need to succeed. And with access to our entire back catalog, you'll never miss a beat. But that's not all. Our members enjoy exclusive one-on-one sessions with veteran miners, plus direct access to special pre-sales and insider opportunities at Bitcoin Mining World. Ready to take your mining to the next level? Join the MasterMINED Club today and secure your spot in the future of Bitcoin mining. Visit bitcoinminingworld.com or scan the QR code now. And now back to the show.
Welcome to MasterMINED. I'm your host, Joel Thomas, and today we've got a fascinating episode with Nicolas, who is the founder of Constellation Heating. He's going to be teaching us a ton today about power markets, utilities, Bitcoin's role in the energy grid, and so much more, which is going to be awesome. I think we're going to learn a ton today. But before we get into that, there's a couple things I want to mention. First off is we have a very cool opportunity here for a hosting site in Idaho. If you are interested, you can see everything on the screen, but please hit up JJ and you can just hit that little QR code. So definitely check that out if that's something you're interested in. And also, if you want to get the best deals anywhere in the world on Bitcoin mining equipment, infrastructure, etc., all of the best deals are in Scott's deals on Telegram. So make sure you please hit the QR code, join the group, and keep an eye on that if you are looking to buy, sell, or anything that falls under that umbrella. So all of that being said, Nicolas, welcome to MasterMINED. Thank you so much for being here today. Can you please tell us a little bit about yourself and your background?
Yeah. Morning, Joel. Thanks for having me on your podcast. My name is Nicolas. I founded Constellation Heating couple of years ago, 2 years ago, actually. And the idea of Constellation Heating was to, everything around mining, Bitcoin, and how to bring back mining into homes. So my background, I am a mechanical engineer, did that for over 10 years, work in oil and gas, refineries. So love to build stuff, repair stuff. And later in my career, I moved to finance because I wanted to know how those refineries or big infrastructure gets built. And so what I did is I worked for an investment fund who was doing energy infrastructure investment. So mostly gas utilities, electric utilities, and electricity projects in the United States. So basically that's what I've been doing for the last maybe 15, 20 years of my life. And now it's full-time Constellation Heating to bring back mining into homes.
Amazing. So I think a really, really great place to start here is how the power market works, because I feel like your experience in that, and obviously you are an expert of experts in this field, is going to be really useful because, again, a lot of people watching this, you have people who have a lot of experience mining and people that want to start industrial scale mining operations, home miners, and everything in between. So learning how the power market works, I think, is going to be really exciting here.
Yeah, and to me, Bitcoin, or when I realized the potential of Bitcoin, it's like a triangle. So you have three very complicated things to achieve in parallel in order to Bitcoin to, in my opinion, truly succeed. The first one is manufacturing. So Bitcoin is not only a software thing, it's a hardware thing. So manufacturing equipment people can use, that was one pillar of the triangle. The other pillar is what we're going to talk today is the energy infrastructure. So earlier in my engineering career, I had no idea how the power market works, how really Bitcoin can integrate into those power markets. But, the last 5 or 6 years of my professional career was learning the pain points of utilities so we can, buy them or really understand how they work so we can, make a proper offer to buy them. So I really understood what their challenges were. And I was a Bitcoiner. Before all this, I was a Bitcoiner. And I realized that Bitcoin is the third, pillar where the energy market can really benefit from it. well, Bitcoin will benefit from it, but the energy market and the whole population can benefit from it. So basically, the power markets. There's many things we can cover today. Is just the first section. I would suggest we go into a higher level. This is not my area of expertise. This is how the transactions are made, how people are buying power. So I'm not an electric or a power trader. I've worked with people doing that, but this is just at a high level. So there are 3 levels of how you can buy power, or how a utility can buy power. So the first level is actually they go through what's called an RTO, Regional Transmission Organization, and they are the one managing all the power auction. So these entities, they will auction power for like 3, 4, 5 years in advance. So typically we call that capacity auction. So that gives a signal to the industry, like what's coming in the next, I would say in the medium longer term, so they can prepare. If you have like a major upgrade you need to do on your power plant, on your gas turbine, or whatever the equipment you're using to produce the electricity, you can forecast, you can plan. And if you're off the market, that's a signal to the market that you won't be available for any reason because you have maintenance or whatever. So those are the long-term auctions. Where it really happens is in the day-ahead market. So this is another a second level. So the utility, and maybe we have a slide on the what we call the dot curve. So a utility, basically what it manages is it in real time, it has to match the power generated with the power consumed, or the load from their customers. So it varies during the day. At 6 in the morning or at 6 p.m. you have peaks, and throughout the years you have peaks. So northern regions, they are what we call winter peaking utilities, and in the south, where there's a lot of air conditioning, they are called summer peaking utilities. So you have that dot curve superposed to the yearly average consumption. Because in winter and summer, depending if you're a winter peaking or a summer peaking, it's different. So the day ahead market is there to balance, or actually to match that curve. So if it's hotter than expected or colder than expected, the utility will send a signal to the RTO, the Regional Transmission Organization, and they will call for more power. So people who are able to deliver that power will bid on that auction. So that's usually 24 hours in advance. And the third level is what we call the real-time market. For some reason, if there's a gas turbine that goes out, or a plant that needs to turn on, or any expected event, you need to be able to react fast. So the 5-minute or the real-time power market, not all players can be part of that market for obvious reason. I mean, you cannot turn a nuclear power plant or a huge combined cycle turbine in 5 minutes. That's just impossible. Gas turbine, you can do that. So this is where Bitcoin really, we'll discuss that later, but this is really where Bitcoin fits into the power dynamics, or the power market. And it's a super flexible load. I mean, you can turn that on or off as you want. Compared to sometimes people are saying like data centers can do that, but that's not really true. I mean, Facebook or Amazon, they don't want their data center to be turned off. They can maybe manage the load during the day, some data center, more computation at some time of the day, but usually they want their data center to be 100% uptime. They don't want to turn it off because it can create like customer experience issues or stuff like that. Bitcoin, the only incentive a Bitcoin miner has is the profitability. I mean, other than the heat that we'll discuss later, a typical miner is only mining because there's a financial incentive at the end of it. So if the power utility, and they're doing that in Texas already, power utility, if they are willing to pay more for the miners to shut down, couldn't do it. So they are shutting down their operation. They get a financial incentive to do that. because they're providing a service to the grid. And back to Constellation, when I started mining, I was like, I don't get the big miners. I know some of your audience are doing that, but what I don't understand from their business model is this: your primary byproduct, which is heat, is wasted. For me, as a mechanical engineer, I mean, being heat efficient or being energy efficient is something obvious. It's like, why aren't they doing that? And then I realized that, okay, they all settled or set foot in Texas after the China ban, because Texas has a huge problem. That duck curve in Texas is very hard to balance for a grid. So you see in the top line on that graph in 2019 versus 2020, 21, 22, the curve is very different. And this is because this is a net load on the utility. This is for California, but it's even worse in Texas. So over the years, the curve has become more pronounced. What you want to do for a utility is you want to have that curve as flat as possible. So that would mean you can run only one nuclear power plant, full capacity, no swings and more production, less production. It's much easier for a grid to control. But what the renewables have done to the grid, I mean, there's some good things with renewables, but with the perspective or with the lens of a grid operator, it's a nightmare. So you see the variation throughout the day is way more intense than it used to be. This is just because there's more renewable coming online when you don't really need that power. So in Texas, I know sometimes miners, they get paid because the utility, it's cheaper to pay your consumer to take your power instead of turn off your equipment. And sometimes you can damage your equipment, you can damage the grid if you don't do that. So they are stuck with a kind of a overproduction problem during period of the day where the power is not required.
So that's really fascinating. Really fascinating. So do we want to maybe talk about how a utility works in terms of revenue? And because I know we're going to talk about, for example, how Bitcoin can smooth out this curve a little bit later and, talk about heat reuse in specific, but maybe this is a good thing to talk about is how a utility works in terms of revenue so people can understand that.
This is a fascinating concept, like a utility, and we're going to circle back with the duck curve later in that presentation. But how a utility works has nothing to do with a regular company or business. Typically, a business, let's take Tesla for example, they make revenue by selling cars. So you need to build great cars in order to sell more cars and then increase your revenue and then try to manage your costs. So at the end of the day, you get a profit. A utility is completely upside down. Sometimes we call it like the revenue build or the inverted pyramid or the bottom up. And there's many ways to describe that. I think I have a picture. The second slide.
Let me pull it up here.
Yeah. It's really going to... the third slide. Let's go with the third slide. Sorry about that. So a utility is granted a monopoly for obvious and not so obvious reason. I mean, if you want to keep your landscape clean, you don't want to have like 10,000 poles or you don't want to build twice the infrastructure required, because the infrastructure is really expensive to build. So you cannot build, two sets of electric distribution systems. So how it works, the regulator will provide or will grant a franchise to a utility. So the regulator, every state has a regulator. They provide the utility the grant to operate that system. So they not only have to operate it, they have to maintain it, upgrade it. And so they are granted a monopoly, but that comes with a lot of responsibility and oversight from the regulator. So basically, in the investment world, I think most of the time utilities are considered like blue chip stocks, predictive or stable dividend yield, stuff like that. So, and there's a reason for that, because the regulator, if you see the second box in that formula up there in the slide, the second box, the rate of return or profit, is set in advance by a formula. So the utility doesn't have to improve like Tesla has to do. It doesn't have to improve their product or make sure they have like better cars than their competitors, because otherwise they won't sell any cars. It's not the same thing. They are granted not only a franchise, the right to operate, but they are granted a profit, literally, at the beginning of the year. If the utility executes well and does everything according to plan, will earn that profit. And how the profit and how a utility makes its money, it's very counterintuitive. It's not on the power they sell. So basically in the United States, early in the 90s, they started something called deregulation. Most of the miners have maybe heard of it, but they don't know exactly what that means. So a utility, what it is, basically, it's, I would say, most of the time, three things. It's generating power, it's a transmission infrastructure to bring that power from the generating site to the distribution site, and it's a distributor. So it connects the grid to the customer, the final step, usually in cities and more crowded areas. So when they decided to unbundle, as I mentioned, like 35, if I'm correct, I think 35% of utilities in the States are unbundled. That means that vertical integration, generating, transmission, and distribution, they broke that apart. So it's three things now. So you have independent power producer that will generate the power. You have transmission companies that will only do transmission projects, and you have the utility. So the utility distributes the electricity. And when I joined the gas utility or the investment fund, I couldn't understand that the utility or the gas utility or electric utility is not making money with the electricity it sells to the customer. So it's what we call usually a pass-through cost. So in a bundle utility, that would be part of the cost of service, the first box in the formula up there. So cost of service is everything the utility has to buy. So they have to buy their power, and it's a pass-through. They are buying it and they're selling it to the customer. They don't make any margin. They're not allowed to do any margin on that. So they are not making money with the volume of electricity they're selling. So that's counterintuitive. And so some of the utility are still what we call bundle. So they are vertically integrated. They do generation in Quebec, where I live. They are super bundled. They do everything. So they do the generation, hydro facilities, we have many of them. They do the transmission, and they do the distribution as well. But again, they will charge the customer based on a kilowatt hour consumption, but they're not making money. The money they make, or they're allowed to make, is on the formula on the slide. It's what we call the rate base with the equity thickness multiplied by the return on equity allowed. So let me explain what that means. So the profit a utility can make is solely based on the assets they manage. In the industry, we call that a rate base or rate asset base sometimes. RAB, the acronym RAB. So the RAB, or the asset, the rate base, is basically, we can summarize this by the net PP&E of a utility, all the assets they own. This is most of the assets they own. They are categorized into the rate asset base: poles, wires, transformers, hydro facility, steam turbines if they generate power, transmission lines. All those assets, they are in the rate asset base. So let's take a very easy example. You have your fairly big utility, you have $1 billion in assets. So what the regulator does, first of all, it will allow you to build more, because we know accounting terms, every year you have depreciation. So you need to replace that depreciation with new assets that you're going to build or maintain, and so that you will increase your asset base. So the regulator tells the utility, yes, you can build a new project. It makes sense. Let's say a new transmission line, another $1 billion that will be added later on your asset base. So profit equal the rate base. That's what we just explained. So basically is the net PP&E on your balance sheet for a utility, times the equity thickness. This is a term really from the industry. So equity thickness, it's basically the capital structure of the utility. So the capital structure, basically it's debt or equity. And because utilities are somewhat highly regulated, they must be stable. You don't want a risky utility, because the implication would be too great. Like there's a monopoly, so they rely on their electric distributor for power. So they are regulated, so they cannot YOLO and leverage 95% or that kind of stuff. So basically, rule of thumb, it's 50-50. So the capital structure is 50% equity, 50% debt. So what that means is the rate base, all the assets that the utility owns, have been financed through equity and debt, 50-50. So the equity portion, they are allowed to make a return on that. And that's the last term of the equation, the return on equity allowed. So every year, or usually every 1 or 2 years, the regulator will tell the utility, you've done good or you've done bad over the last couple of years. The project you've submitted, you executed well or bad, and based on the behavior of the utility and based on the investor friendliness of the regulator, they will allow you a return. Typically, it's between 9 and 11%, depending on projects or utilities. So the profit is you have $1 billion in rate base times 50%, let's say the rule of thumb, the equity thickness, so the equity provided by the investors. So that's 500 million times 10%. So that's 50 million, the return on equity allowed. So the utility is allowed to make 50 million in profit this year. So this is the starting point for utility. Usually for any other companies, this is the ending point, the profit. You've sold that many items, you control your cost of production, your admin costs, your depreciation and all that, and you end up with a profit at the end of the year. That's the opposite. So you see that the rate of return in the formula above, it's a very important component of that formula. So there's a cost of service, which is like any other company, staff, cost of goods sold, admin expenses. So that's cost of service. You can have fuel and some other things very specific for utility. You add the rate of return, which is the profit we just mentioned, like 50 million in our case. You add depreciation, tax charges, and that gives you the revenue requirement. So now the regulator tells the utility, you're allowed to charge your customers in order to make that much revenue, because we're allowing you to make a profit. And now, how can you charge a customer? Well, that's the line below, the second line. So basically, the starting point is the revenue requirement, and we can simplify it. Let's say all customers are equal. Industrial, residential, commercial, they're all equal. So basically, if I'm allowed to, let's put an example. Cost of service, 500 million, my profit, 50 million, depreciation, tax charges, let's say my revenue requirement is, let's say 200 million. Then I divide that by the volume of my, the power load or the consumption of my customers. And that basically gives me the rate I need to charge them. So the regulator will most of the time give freedom to it still has to be approved, but we'll give freedom to the utility to build a tariff grid that we call. So the tariff grid is, of course, if you're in industrial and you consume a lot of power, there's not only, there could be political implications or political reasons why you want to give cheaper rates to big industrials. You want to bring, economic activity in your area or any other reason. So basically, the customers are segmented into industrial, commercial, and residential. And unfortunately, usually the residential rate is the highest amongst the three. So all that to say that the revenue model of a utility is flipped completely upside down. And very few people know that. And so it's super interesting. So the volume of electricity that transits through a utility, the only impact it has is basically it can lower your rate. So the higher the volume for the asset base or the rate base, or we can call that the energy infrastructure put in place by the utility, the higher the consumption or the electrical volume through that infrastructure will minimize your cost. So my theory is that Bitcoin, if we go back to the duck curve, Bitcoin can really help lower the total cost or the electric rate, should I say. Why? Because in a perfect world, imagine a flat horizontal line at the top of the duck curve. So it's not a curve anymore. It's just a flat line. So this allows two things, actually, probably way more than that, but two major things. The first one is we're kind of stuck with renewables now. Not that it's a problem, but for a grid operator, it's complicated. It can be it's a big challenge. So we have renewables that really fluctuate the grid. But the idea is to, like I mentioned before, if you can have like one big power plant that never turns off, this is the cheapest power that can be produced. It's 5 times, 10 times cheaper to produce power with a nuclear power plant than it is with a wind turbine or solar panels. It's two different technologies and two different, and it's much more reliable. 90+% uptime for a nuclear or a big coal plant. So if we can imagine also a very important thing with that duck curve, all your system, all your energy infrastructure is built to withstand the power consumption of the worst day and the worst part of the day through that worst day. So let's say you're in northeastern United States. It's middle of January or February, very cold day, minus in Fahrenheit. What would that be like? -5, -10? I don't know. But in Celsius, let's say it's -20. Very cold at 6 p.m. So your grid has to handle that load. So you can imagine, it's like the analogy I always make is like we're building a 10 lane highway, but most of the time we're using only 2. Once or twice during the year, we're using the 10 lanes. And, if you still draw that, flat horizontal line on top of the duck curve, all the area under that flat line is wasted potential from your energy infrastructure. It's like the infrastructure is there, it's built, people are already paying for that because the regulator approved it. And why can't we do something about it? How can we maximize that? So, since I was a kid, I've been told like energy efficiency, power is expensive, and that's right. But what if, just like we did with the financial or the revenue build of the electric utility, what if we flip everything upside down and we say, instead of consuming less and less and less, what if we can consume more, but do it in a synchronized way or in symbiosis with the grid? What if when the grid needs power, you can turn off, and when the grid doesn't need power, all the infrastructure is there. Why not use it? So this is where I think Bitcoin can play a major role, because for all the qualities Bitcoin have, other than the financial and the monetary system it brings to the world, but in terms of energy, I mean, it's super flexible. I mean, if let's say in the eastern part of the United States at 6 p.m., all the miners turn off, I mean, the network's not going to become more vulnerable for that. The hash rate is going to be still very, very high. And then we can, okay, but that simple action allows us to integrate very well with the grid. And yeah. So so were you going to say something?
No, that's fascinating to think about, because I know a lot of people think Bitcoin mining is the problem in energy. I mean, this is just like, if you go on Facebook and you read normies who aren't Bitcoiners, you know, this is the crap the media tells you. And then you listen to somebody like yourself, who's very, very deep into the power world and understands this at a very granular level, explain how Bitcoin is actually the solution for a much, much better, more balanced energy grid. And that's, you know, I think that, I mean, we understand that as Bitcoiners, but that's really.
Yeah, I think, well, I used to work with electric operators, and they don't understand it either. So it's, we really have to demonstrate that it works, and then they will jump. Those are not risky, you know, businesses. They want something that has been proven by the markets. And so you're bringing in completely new technology. They don't even understand Bitcoin. So I always say, if you don't understand the value proposition of Bitcoin, the monetary tool, of course, you're not going to understand the value proposition for the power grid. I mean, the base layer, you don't even believe in Bitcoin. So how can you believe that Bitcoin can solve your most important problem, which is a very big problem for a utility to balance that? And yeah, so
So I want to dive into that a little bit more, but maybe we should talk about how Bitcoin can integrate into the grid here a little bit.
Yes. So in order, so why the utilities have been, you know, denying miners before, and they did not in Texas, is because in Texas, they when the miners set up their, you know, mining operations in Texas, they did that in conjunction or by having discussion with the grid operator, ERCOT, and which is not the case for every other places or location. Typically, the miner, they rent a big, you know, warehouse. They put millions of miners in there, and they just take huge load, power load. But the utility, you gotta imagine it's middle of January, 6 p.m. The utility, they need to buy power because it's colder than expected. So who's going to provide that power, and at what cost? So here where I live, and it's pretty much the same. Some in the all across US, some grids they have what's called a dynamic grid, or, you know, for peak hours you get charged a little bit more to compensate for that. But let's say where I live in the province of Quebec in Canada, I think it's 10 cents now, Canadian dollar per kilowatt hour. It's 10 cents in the middle of January, or it's 10 cents in, you know, August or April, when basically my household doesn't, you know, draw a lot of power. So I pay 10 cents, but on the other hand, they don't have the power. So they have to buy from, you know, gas turbines, and they buy it at like $1 per kilowatt hour. So there's a huge loss for them. So for a Bitcoin miner, or let's say for a utility, instead of buying that, you know, $1 per kilowatt hour for a you know, emergency producer, let's call him that way, well, he can just send a signal through the same power market, you know, the auctions we discussed at the beginning. They can send a signal like, who's willing, instead of generating power, who's willing to cut power, you know, to turn off their plant, their heating system, their whatever's consuming the electricity, who's willing. And I'm willing to pay. Obviously, I'd like to pay less than the $1 per kilowatt hour I have to pay for that emergency, you know, power provider. But if you can do it for 75 cents, of course I will pay you, and all my customers will benefit from that. So this is where Bitcoin is the pristine tool to do that. I mean, you can turn off with no prior mention, or you don't have to call me 24 hours in advance. If you're offering more than my current profitability, well, I will turn off my machine for sure. So if you don't want to do that like maybe 20 times per day, but doing it once per day, if your machines are, because the miners, they want like stable operation, but if you turn off your machine when you're rebooting, it can be a bit tricky. But if you can turn off your machine when the power grid needs it, and they pay you for that, I like triangles. So it's the last, or it's more value unlocked from Bitcoin for the Bitcoin miners. So they get the Bitcoin by doing the mining, obviously, and getting the tokens. They do, with our systems, they reuse all the heat, so they don't have to turn on their, not AC, but their pool heaters or their hydronic system inside of their house. They don't have to turn that on, so you save a lot of money there. And then you can finally have like a financial reward for participating into the grid balancing ecosystem. So I don't know how to unlock more value with Bitcoin than that, but it's I think it's my personal opinion that the typical business model for miners, like big warehouses, it won't survive this, because the customers now, they have a fundamental reason, not only the Bitcoin, but they need the heat. So is the heat my primary product? I don't know. Heat and Bitcoin. If there's no heat, the Bitcoin makes no sense. If there's no Bitcoin, the heat makes no sense. So they work together. And I think for residential heating, this is a tremendous opportunity for Bitcoin to thrive. If we convert like comfort heating, I think it's like 1% of the comfort heating in the United States, we double the hash rate of the network. So we're doing like, it's not 2 birds, 1 stone. It's like 10 birds, 1 stone. So we balance the grid. We help Bitcoin thrive, get more secured. And it's another thing. At my house, I operate my systems in my house. I get paid every month to heat my house. So who can claim that? And if you don't understand Bitcoin, obviously I keep the Bitcoin, but if I would sell a small part of my Bitcoin to pay for my electric bill, I would still be net positive. So, and for now, I'm not already generating revenues from the grid balancing system, because we're working on this. We're starting to integrate with RTOs in the United States that are friendly to Bitcoin. I would say yes and no. They're very open to the idea of having grid services of all kinds. Let's put it that way. And they do not discriminate Bitcoin. They don't encourage Bitcoin, but they're open to the idea. So they are, of course, ERCOT is very friendly to the idea of Bitcoin. They already work with Bitcoin miners. But you have some like PJM in the North, Midwest in the United States. They are open to work with Bitcoiners for that kind of system. And once you pool, so the idea of bringing back that what the big miners are doing inside homes, this is a challenge we're trying to solve.
One thing that you said that was interesting to me when we were kind of talking yesterday off, just preparing for this, is the idea, I think you've clearly made the case that you can use Bitcoin mining to really just, become the capacitor or the battery for the energy grid and smooth it out. But one thing that we were talking about was like specific ways that can happen. For example, you said maybe smart devices can be leveraged together. Yeah. You need to sync them with the grid. Do you want to maybe talk about that?
Absolutely. And this is where the fun starts. Typically, a utility, they run all kinds of programs. Well, of course, they do have an energy efficiency program, but the duck curve, they know it's a problem. They're trying to solve it. And how they try to solve it is typically they would, talk to their biggest customers and offer them discount or, so they can, I think they call it like interruptible. So if any event happened, do you mind if I just, cut the power off so I can save on? So all those kinds of strategies. But when it comes to residential, it's very hard, because residential, we're not big, power consumer. I mean, yes, in Canada, where I live, most of the heating is electric. So yeah, it's a fairly, it's a medium load, I could say. But it won't make a big difference. So what they're doing is they're selling you, or they're giving you smart, appliances like water heater or smart thermostats. So what they do is they have the platform to aggregate all those smart thermostats like deployed on their territory, on their distribution territory, and then they can control your thermostat remotely to help flatten that duck curve. But the thing is, they have so much leverage when they are providing the platform. They are providing all the infrastructure for that. So they give you literally pennies for all your efforts to try to flatten that duck curve. So here, I think they give, at the end of the year, I think it's like $50 that they give you in like incentive or rewards for doing those challenges during the peak periods throughout the day. So the idea is, what if we, just like a mining pool, what if we all pool together, and through our constellation of heating devices, what if we pull everything together, and then we can have a little bit more leverage with the grid for offering those power or grid ancillary services. And this is where it gets very interesting, because a gas turbine that starts in the middle of the winter will make $1 gazillion from their operation for like 20 minutes of operation. So why can't we access the same kind of financial incentive or financial reward if we all pool together? And when you aggregate all those heaters on that territory, let's say 100 heaters is like 1 megawatt. That's a significant power load or power consumer for a utility. So they're happy, because throughout the day, when their infrastructure is underutilized, they will gladly provide you more energy. But when you stop, then you're really working in sync with them, and they will pay you for that. So I think with the Bitcoin mining, this is what it solves. Where it gets tricky, though, the machine can stop, but the process or the energy or the heat it delivers, sometimes it can be more critical than at other times. So we do basically two main products. So the first one is a pool. It started as a pool heater. For me, a pool is just a big heat sink that everyone's happy if it's a little bit warmer. So if you stop heating your pool for 2 hours because you live in, I don't know, in the summer peaking region, and they're asking you to, turn off your electric appliances, I mean, it'll make almost no difference. Like if you turn off your heater for 2 hours and then you resume operation after that, I mean, your pool won't suffer, or the temperature will not drop. In a house, it can be a bit more tricky. When it's very cold outside, you don't want to turn off your heat. Well, unless you have like maybe a auxiliary system with propane or gas, that could be a great backup. But typically what we do on all the hydronic system that we install is we install a thermal loop or thermal storage unit in that loop that will heat your house. So basically it's just a big water tank or two, depending on the size of your application, and you store heat into that water tank. And then when the utility, I think it's less than $500 for that appliance or that piece of equipment. So it's fairly cheap compared to the size of the whole installation, and that allows the customer not only to have flexibility to turn off the heater, but flexibility he's not going to lose heat if the heater is turned off for a couple of hours. So absolutely no difference in your home comfort or the temperature inside your home. You turn off the heater when the electricity is needed by the grid, and then you get the financial reward from that, which is much better than what we expect is going to be much better than what they're already offering for residential programs that they already have. So by pooling together and acting as one big player, just like the miners are doing in Texas, much more leverage and better incentive for the customers. So the utility, when they will discover that, they'll be happy, because it's not true. The utility wants to sell you power. They make, well, actually, they don't make, like we said earlier, they don't make money with the power they're selling you, but the rate they charge you is divided by the total volume. So we, back to the equation, we know the required revenue for the utility divided by the second row, by the total energy, the electric load. That's going to give you a rate. And if they can offer you low rates, it's a virtuous cycle, because the regulator, if you go to the slide number 2, because the regulator, what it's going to, it's again, it's a triangle. If the regulator will allow you, the utility, to invest in its infrastructure under the condition that the rates are not increasing too much, because otherwise the utility would, okay, you if there's no regulator, and no matter how I'm rewarded, financially rewarded, if there's no regulator, they're going to build an oversized grid, and they're going to charge their customer whatever they want. So it's always an equilibrium. So if you have higher volumes, that means lower rates. That means, because remember, the utility is a fixed, at the beginning of the year, they know what their revenue are going to be. So if you divide that by a higher volume, that means lower rate. That means a happy regulator, because the customers are happy. The utility will be happy. So it will allow the utility to increase their investments more than they would do normally, because the rates are low. So
Okay, Nicolas, there's two things, because we've got about 10 minutes left here, that I want to cover. One, I want to talk about AI data centers, and two, I want to talk about the economics of a Bitcoin heater. Sure. So first off, let's talk about AI data centers real quick, just 5 minutes, versus Bitcoin mining and power grid, because we know a lot of miners right now in this bear market are converting to AI, and we also know that AI is, wasting all of the heat. So what do you think about that?
Commercial miners are facing like a big kind of a tough environment right now. We know the hash price has been low for 2 years now, since the halving. It's been a tough environment. We've seen progress on the equipment side, but it's nothing revolutionary that would change their business model. They're wasting the heat. So the AI infrastructure, it's not only a matter of capital. When utilities, I've worked with the utilities that have struggled building a transmission project for 15 years. So they're buying developers, the developer go bankrupt, they buy them again, and it's on the regulatory framework, it's very difficult for utilities to operate. So now the AI data centers and the big AI firms, they're getting familiar real quick with the utility world, but it's not the same thing as move fast, break things kind of technology industry that they are used to operate in. Now they got to work with real world constraint and regulation permits, and it's not happening. There's no way the AI infrastructure is going to get built in time for all the promises made to investors. So what's happening and it makes sense. What are their options? I think Elon did that in Tennessee. He bought like a huge facility that was already built. Electrical connection was there. So XAI moved in, and the day after they moved in, they were almost operational. So what the big AI companies are doing is like exactly the same thing. So where are the locations that the power infrastructure is already in place, no permitting required, and the big miners, the Bitcoin miners are their target. So more and more what we're seeing is like, boards pivoting or those big mining companies pivoting to, they call it sometimes a hybrid model or full AI model. I think was it Compass? I can't remember, but one or two have made like different pivots, like either hybrid, Bitcoin and data center, or totally data center driven. And that makes sense. the promises the AI company makes to their investors are so enormous that they need to deliver. And the only way they can deliver fast, I think we're going to pay an extra dollar for renting that space. So that's good for us, for the mining, like the pleb miners or the heat punks. That's good for us. So that means it's going to be less centralized in warehouse, and hopefully with people or companies like what we do is like try to bring back mining into homes, because I cannot blame them. Yes, there's always a Bitcoin mission, but the fiduciary duty of even a mining company, a Bitcoin mining company, is return on the investment for investors. So
is there an opportunity there then for the industrial miner to reuse some of that heat? Because, for example, we know that AI, obviously, all this generates a lot of heat. So
yes,
if you're running an industrial facility, what opportunities?
It's complicated. It's tough. It's not impossible, but I've seen projects, and those are pretty much the only projects I know that make. Well, there may be some other examples, but like greenhouses. If you couple a greenhouse with a big mining facility in a geography where it makes sense, like where it's cold in winter and stuff like that, that could make sense. But otherwise, the heat, and this is a product that even for residential we're struggling with. This is a very low, we call that low grade heat. So it's a lot of heat, but it's low in temperature. So it's below, typically it's like 60 or 70 Celsius. That makes probably 150 Fahrenheit. So one of the big issue is you cannot boil water. Typically in power systems, what you'd like to do is boil water. That unlocks, a plethora of applications. But it's low grade heat, so there's not much you can do with that. But turns out that heating your home, it doesn't require, very hot heat. So you can do that with low grade heat. So applications are quite limited. And for that reason, it's very hard for a big, industrial miner to do something with that heat. Other applications I've seen, it's mostly preheating. Let's say in Texas, that would make sense. Let's say there's a facility or a plant next to the mining operation. Well, what you can do is almost all plants use water. So you can preheat that water. So you will in turn reduce your natural gas consumptions, because typically that water goes into some boilers to create steam or whatever but that could be an application like preheating water or greenhouses. But there's not that many applications, and you need to be close one another. That's another challenge. Typically miners in Texas, they're in remote areas. So that can be a challenge. It's not impossible, but the low grade heat generated by the miners is what's causing the problem. Mining equipment manufacturers, they're aware of that, and they're trying to increase the outlet temperature so you can unlock more application. But for now, we're stuck with what we have in terms of mining equipment.
And the last thing I want to touch on here in a couple minutes is the economics of Bitcoin heating. For example, like profitability, install, maintenance. Like if you get like a Bitcoin, if you're a home miner and you want to do some heat reuse for your residents, what do the economics of that look like? How is the maintenance, et cetera?
The best application, what we're trying to do now is integrate with HVAC system. But what we started with is hydronic system, so heated floor. Usually more luxurious homes or high-end homes would have that type of a heating system inside of their residence. So let's say when you do it from scratch, just the heater can be rough numbers. Let's say $10,000 for heaters with the miners, depending, cost will vary obviously with the miners you want to have and the efficiency they have. But let's say if we take the S21 Pros that are somewhat popular now for residential mining because they are 240 or 220 volts, the machine itself will give you roughly, depending on your cost of power, roughly $10 to $15 per day in net profit. So that's not, it's pretty good. And you also have to consider the fact that you're turning off your current your heating device, which is going to save you another 20 or 30 bucks per day of electricity you would have spent otherwise. So combined together, I'd say between 10 and $50, depending on your cost of electricity, that you make in kind of net profit per day. So turns out that the payout of the equipment, usually it's less than 2 years. People, even with a tough environment like we have right now, the low hash price, typically within 2 years, you have full payback. That's kind of important to have a quick payback. When I design the machine, I mean, I'm stuck with the environment we're in, the Bitcoin price, I don't decide, the, Bitcoin difficulty, I don't have much impact on that either. So it's, I was like, okay, hopefully I need to build a machine or a system that can, have a payback within 4 years. Because I was 4 years, those are the halvings, the reward, typically the new ASIC manufacturer release new hardware equipment every 3 to 4 years. You don't see that. It was maybe more obvious in the past, but all that to say that you need your payback within 4 years to make sure that you're going to cover your cost of the equipment, and down the road, if you want to maintain or simply replace for more, better miners, better Bitcoin miners, you can do that. But the fact that it runs in immersion, so people doing mining, it's typically not something they would do because it's more expensive, it's more complicated. You need extra hardware, pumps and coolers and stuff like that. But the beauty is with our system, it's all packaged. So it's like installing a pool heater. It's not plug and play, but once the installation is done, is just you start the machine and it starts hashing, and it's very convenient for the customer. So basically, idea is to get the payback within 4 years, to make sure you made your money, and if you want to replace your mining equipment, it will still be at a profit. But that's the pretty much the how we work with customers is.
Okay, fantastic. I had one question in that somebody asked, and then we will wrap up. But so, if real quick, if a miner wants to approach a power company about setting up shop, like say they want to, get some containers going and they're developing a site, who would they talk to at the utility? Like where do they start?
Well, they need to talk with someone from the power desk. That's one option. But typically, first thing you got to know is your utility bundled or unbundled? What that means is, are they generating the power or they are buying power from someone else? If they are buying power from someone else, then you have a second option. You can try to reach out to the RTO, which is, depending on the region, it can be PJM, it can be SPP, ERCOT, New England ISO, New York ISO. There's less than 10 in the country. So reach out to these people, and you're going to qualify under what's called we talked about it, the capacity auction. So you have a long-term forecast. You can negotiate a power purchase agreement with them. It's either with the utility or the RTO, but you have some agents as well that can do that for you.
All right. And the last question here, Nicolas, is where can people find you if they're interested in doing some of this awesome home type heating where we can help balance out the duck curve and make everybody's life better?
Balancing the duck curve. I like that. Of course, they can look on our website, constellationheating.com. It's been a while since we updated. We're about to release a new version of that heater. So a new design, a new application and control system. So that's very exciting. And of course, on X, my handle is BTC_grid.
All right. Well, I want to thank you so much for coming on here. And real quick, like I said, if you want to get the best deals in Bitcoin mining, head over to Scott's Deals. And like I did say at the beginning of this webinar, we do have a great hosting site here in Idaho. If you're interested, hit up JJ at Bitcoin Mining World. You just scan the QR. But other than that, again, Nicolas, thank you so much for coming on and sharing an incredible, vast depth of knowledge on the power industry. It's been fascinating. I've learned so much today, and I just want to thank you for donating your time.
Well, thanks for having me on. It was a pleasure being here.
And we will see you next time on MasterMINED.
Thank you for joining us in the MasterMIND Club, your ultimate gateway into the world of Bitcoin mining. Whether you're just starting out or looking to scale your operations, our vibrant community of like-minded enthusiasts is here to support you every step of the way. Join us next week where you'll exchange ideas, brainstorm strategies, and stay motivated on your mining journey. Thank you for joining us and tune in next week.